Told you I'd give you a jam-packed schedule today, guys. So done Cardano earlier, done XRP earlier. Go back and watch those videos. But this one's ICP. And there's a degree of panic in the comments on my last ICP video from 2 days ago. ICP's dropped 10%, ICP's dropped 8%. We're still holding support, guys. This is crypto. So since the last video, 2 days ago, ICP's dropped around 3.6%. And we're currently holding support, and we've got another support to fall back on. So everybody's panicking about ICP, but I did give you 2 examples, and I did tell you to split your mindset between trading and investing. What I mean is, this was the example of a trade. This is the example of something where you're looking to get in and you're looking to get out over a short period of time. High probability move is testing the previous swing high. Why is that? Because at least you'll get a double top. If the trend reverses, then you can bag your gains. So you're not looking for extensions, you're looking for where price action's been recently. That's the aim of the game. So from an investment perspective, accumulating at this support, accumulating at this support, not putting all your eggs in one basket, and making sure that you've got enough to capitalize. If it pulls back and average your position down, that's the aim of the game, guys. Average your position down, not up. Then you can take advantage of moves like this. That's from an investment perspective. From a trading perspective, this trade's still on. We're waiting for one thing: a break, a close, good enough risk to reward, shooting for the swing high. So this is what I'm looking for in the short term in XRP, and this is how I see it playing out during FOMC and beyond. Okay, so the bulls and the bears. What do we mean by the bulls and the bears? The bulls are the buyers, the bears are the sellers. Now, this is a narrative, guys, that you probably hear on different crypto channels. This is probably something that you hear all the time across crypto. But let me tell you guys, anybody that says that you're a perma bear, anybody that says if you sell, you're not welcome in the community, you're not part of the community, you're a perma bear, you're shilled out of the community, get yourself over here, guys, because let me tell you, every single one of them is a bear at some point, because every single one of them will sell at some point. If they don't, they'll ride it to the top and they'll ride it back down to the bottom. I've done a video before on diamond hand, guys. That's one of the biggest things that will absolutely wreck you. Hold your bags to zero. Don't hold your bags to zero. So from a trading perspective and from an investment perspective, we're going to be talking about the difference between the two and how you can take advantage of ICP from both. So the aim of the game is we've got levels of support, we've got levels of resistance. You've got your bulls, you've got your bears. Sometimes your bulls become your bears, sometimes your bears become your bulls. What do I mean by that? So we know that this level was a key level of resistance. We know that the bulls were bullish down here. We know that the bulls were waiting for a break from this pennant. Once the bulls got a break from the pennant, the bulls got momentum. So the bears laid off. Now, the bears are not just people, a bunch of people that are waiting for the market to go down. Bears are also people that are taking profit. So the bulls are pushing up, the bears are laying off. Some of the bears become bulls because they know that bulls have got sentiment until they hit a big resistance point. When they hit a resistance point, what happens, guys? The bulls that are bought down here at this breakout, from a trading perspective, they take profits there, and the bulls become the bears, and the bears have got their eyes on this level. That's where the bears regain control and push price down and push price down. We've got the trend line built in, so we know that 1 touch, 2 touch, 3 touches confirms a trend. Once you've confirmed the trend, that means that the bears have got control, and once the bulls pop their head up above trend, that is the first time that they're regaining momentum. So that's from a trading perspective. We're going to go deeper into that very shortly, but from an investment perspective, I wanted to show you this. Now, what this is, guys, is a descending channel. What a descending channel is in a pullback is a bullish move. If I can just zoom in on here. This is a bullish move. So why is it a bullish move? It's signaling exhaustion. You've got a flag to the downside. You've got a flag to the downside. The bears have pushed price all the way down there. Then you hit a key level of support. Then you get the grind. Then you get the grind. Then you get the grind. That is actually bullish. When you're pulling back, that means that it's signaling exhaustion. Once you regain control and break out of this channel, that's the first signal that the bulls are regaining control. That's the first signal that you start to get interested. So does that mean that that's a time for entry from a trading perspective? No, it doesn't. But we can indicate and we can identify from this descending channel. This is just price action, pure price action. This is real time. You can identify clues from price action. This is a descending channel. This is a bullish move. Once the bulls regain momentum and push their head out of the channel, that's showing that they've got strength. Some of the bears at that point will become bulls because the bulls have got momentum, the bulls have got the positive narrative, and then the buy orders will start eating out the sell orders and price will start going up once confidence is in the market. So we'll stick some indicators on there. This is the daily chart, by the way. Stick some indicators and look at this, guys. Look at this grind down from the stochastic. The bears have pushed price at this key level. This key level was rejected on the stochastic, and we had a price pushing down, and we're massively, massively oversold now. So we're waiting for the stochastic to push up, and we're waiting to see how price reacts as we're pushing up here and as we get back to this trend line. When we get to the trend line, it's all about whether you break and whether you close above that signal real momentum. From an investment perspective, remember what we said? Accumulating small amounts at strong levels of support gives you the best advantage ever. Doesn't mean all of them are going to get taken. Probably all of them are not going to get taken. But the capital that doesn't get taken, you could stop your limit order. You can use that capital and you can use it elsewhere where it is somewhere that's going to bring your average down rather than bringing your average up. You're not bringing your average up, guys. You're bringing your average down. That's the aim of the game. So anyone that's new to crypto and that's buying the highs, remember, by buying at lower levels, you're bringing your average down. But make sure you're not doing it on the high risk cryptos because some of them will go to zero. So that's what you're looking for from an investment perspective. You can see that the RSI is coming down as well. The RSI is grinding down into an oversold level. So what happens every time that we hit these oversold levels? Let's have a look on the chart. There's one. Here's one. Get a big bounce. So that big bounce, say big bounce, that bounce from its low here to its high, that's 42%. It doesn't look much on the chart. That's 42%. Then you get the move to the downside. That was signaled here by overbought RSI. So you get a pullback. When you get the pullback, hit resistance. That was the first signal. So we're grinding down and we're grinding down. But what I'm saying is every time that you hit a bottom here, get a pump. Every time you hit these extreme bottoms, you get a pump. So we've got the descending channel here, which is signaling that's a bullish move. We've got oversold indicators, both the stochastic and the RSI. We know what happens every time they hit oversold. You expect a bounce. So is the bounce going to be big enough to break trend? That's what we're looking for. How can you play the next step? From a trader, this is from a trading perspective now. How can you play the next step? Because it's all about preparation. If you think about these, this channel here is 1, 2, 3, 4, 5, 6, 7 days of accumulation. 7 days of accumulation in a downwards trend. So potentially stick another channel on here. It might not play out like this, guys. This is hypothetical. Trading is a game of probabilities. A lot of the time, the things that you're looking at don't actually play out. So if you put in a bottom here, you come in, you put in a bottom at this level here, this key support. Then you start grinding up, then you start grinding up, then you start grinding up. If it plays out like this, if you get a narrative, you're going to get a big shoot to the upside. It probably will break trend quite quick. The rest of the crypto market will start breaking, but we haven't had that narrative yet. So we're looking for the short-term analysis. If it plays out like this, that's going to be another 9 days, guys, just to get to this trend line. So in 8 or 9 days, if we get to this trend line, is this stochastic going to have come up and become overbought? If it does, we can expect a rejection. And then this is where the interesting thing happens, guys. And this is where you can get a good risk to reward. If you get a rejection at this level and a pullback back to this support here, and during that period, the stochastic comes all the way down, you've put in a higher low, that's a strong indication that you're going to go for the trend. You're going to go for the crack of trend. Now, there's two things that you do here from breaking trend. Things happen differently, guys, and we can only look at probabilities. So let's give a couple of examples. You could get a big volume spike, which push price all the way up here. What would this do to your P&L? That would bring your risk to reward. If you're shooting for the previous swing high, which that's the more conservative level, that's the highest probability of hitting, then that's bringing your risk to reward down to 1.14. That's not big enough. So if you did get a big volume spike to the upside, what's not likely to happen is this. You get another candle which pushes price all the way back up. If you get a volume spike to the upside, you're likely to get a candle that pulls back like this. Like a lot of the time, it's 50%, guys. So what that would do, and if you had a retest here, break and a retest, we talk about the break and a retest. So if you had a candle that come back down and retested here, what that would do is give you a second chance entry, bring the risk to reward to 4.42. So that's one way it could play out. Another way, if it popped its head up, like that, then you might actually get a candle the next day, but that's good enough for a signal. Why is the first one good enough for a signal? Because that brings your risk to reward to 4.42 to 1. That's a good risk to reward. That's only a small break. That's still giving momentum to the bulls, but it's giving you a good enough risk to reward to be able to take it at that point. So basically, if you did get a 50% retracement candle, which come back and tested support, it's not too bad. It's not too bad, guys, and you haven't stopped yourself out. Remember the stops below the previous swing low. So I was probably just misleading you a little bit there because I never had the stops below the swing low. So let's do that again. If you've got a big volatile spike to the upside, risk to reward, 1.38, definitely not worth taking. However, remember, 50% candle you're likely to get on the next one brings your risk to reward to 2.54. So that looks better. It's all about being greedy with your entries, making sure that you're entering at the right time, guys. You're sticking to your rule set, and you've got a good risk to reward. Minimum of 2 to 1 risk to reward, and a high probability move when the bulls have got momentum does give you that edge. Right, okay, that's enough for today. So, right, midweek market analysis. That's supposed to be on a Wednesday, guys. We've got FOMC coming into FOMC tonight. So, with markets pulling back into FOMC, that can be a positive thing. We're not likely to get an interest rate cut. Because we're not likely to get an interest rate cut, the market is negative. They're looking for the interest rate cut. But like I said in the previous video, I don't think that the interest rate cut is going to be the catalyst to drive the alt season. It's going to be some news narrative, and it's probably going to be driven by Mr. Trump. So it's going to be a marathon midweek market update tomorrow. So drop all of your altcoins at the bottom. I'm going to go through every single one of your requests. So make sure you drop them in the bottom, and I'll see you in the next one.